I just wanted to address the Ethereum ETF that lots of analysts were saying would happen by today. Well, so far they haven't, as far as I know, last I looked. And obviously, even if they do get approved today, which is highly doubtful at this point, um, they obviously wouldn't launch today. And well, keep in mind, even if they did launch tomorrow or the next day, which is, well, they're not likely to launch the next day because the next day would be July 4th. But even if they launch sometime this week, which again remains highly improbable at this point, the probability that Ethereum will just shoot to the moon once there is an Ethereum ETF is unlikely. Why do I say that? Well, did the Bitcoin ETFs just suddenly spike once they were launched? Or did they dip significantly, pretty significantly, and then take a little while to start to build up? Yep, that is exactly what happened. Right? They were a punching bag for the first couple weeks or so until they started to turn around. And doesn't mean it has to happen like that for Ethereum. It could be that the Ethereum ETFs will in fact rise after they're launched, but there's no guarantee of that at this point, and there's certainly no information to show that it would. And the way Ethereum is looking right now, it does not look like it has any indication, even on higher time frames, that it's just going to suddenly make for the moon. In fact, it is very likely going to do very much what Bitcoin is doing for the foreseeable future over the coming weeks and months, and that is if you zoom out on the big picture, to effectively go a little bit sideways, possibly even a bit down, and then turn around. Sideways and of course, when you zoom in, you can see, the price is going up and down all the time because they're just following the returns, and the returns oscillate back and forth between positive and negative on a regular basis. So we're likely to see that happen on Ethereum as well. But is Ethereum likely to hit $6,000 by the end of August or September? No, there's no indication that will be the case. Does that mean that it can't happen? No. There's always probabilities. But that's why, if you're a serious trader, you use leading information, not lagging information, and you look at low time frames for actually entering and exiting trades, because you don't want to get into a bad position, right? More than anything, you want to follow the 3 basic rules, which are, first of all, take your profits early and often, which means you have to be in winning trades most of the time. You want to limit your loss so that if you're not in a winning trade, you get out immediately and then reassess before you take your next trade. And you don't want to be emotionally attached to your trades. And the reason you don't want to be emotionally attached to your trades is because, very simply, if you trade with an emotional attachment, you are more likely going to make foolish decisions, specifically irrational ones that will get you wrecked. And that's not what you want to do when you're trading. You've got real hard-earned money on the line, and your job is to make more of it. And if you're not doing that, you're not doing your job well, right? Unless you have one of those weird 1 in 100 million jobs where you're tasked with losing money in order to, wash for tax reasons or who knows what. Maybe you work for some eccentric billionaire who just loves to burn money. Who knows? Weird things happen. But the 99.999999% of people who work for anything, work for the thing as a retail trader, and you're trading your own money, you most likely want to make more money. Otherwise, why would you do this? If you want to lose money, you can just go to a casino and play slots all day, or go to the poker table or blackjack or whatever and have a lot of fun and burn money that way, right? If you want to lose money trading, you certainly can. It's quite easy. Just make bad trades. And to do that, you can just use information. Most of the time, it will help you fail. It'll fool you out. When you think you're making the right decision, it'll trick you out. Whereas if you're using the leading information that we use at Alpha Trading, when we use the volatility, entropy, probability, and statistics, or what we call the VEPs, then you are more likely to be in a winning position at the end of your trade if you read the information correctly and this is critical, take the appropriate relevant actions. If you don't do that, if you don't do those two things, then obviously you're not going to do the three basic rules, right? And therefore, the probabilities will remain against you. So, again, the fact that there's no Ethereum ETF is nothing to lose sleep over. Yes, there's very little Ethereum left on the markets. Less than 10% of it is available. But that's still more than enough to trade. That was a wacky interruption. Anyway, that's going to do it for now. Happy trading, folks. And if you want to learn how to trade the VEPs, remember, you can always come to the Alpha Trading Discord at alphatradinghq.com/discord. And you can learn to trade the VEPs for free. See you there.